All right, welcome to Entry Patterns, validating your trades and increasing your probability. And we do that all with price action. The little candlesticks at the 1 minute chart, those are what are going to give us the answers here, whether we want to get into trades, whether we want to stay out of trades. So validating the trade is very, very important. You should not be executing any trade whatsoever unless it is completely validated, okay? This is the way that we verify that we're making the right decision. We have our key area. Price has told us, hey, we do stuff around this area. Okay, great. Draw it out, map it. Price comes down again. Hey, we might do something around this area. So we're going to go ahead. We're actually going to go to this example, which has recently happened. And keep in mind, all these examples are just real. We're just moving with price in real time. There's no need to just go back and pick stuff out and things like that, because it's the way that price moves. It's the way that it does its turnaround. So we're going to go down here because we have a really good example of our patterns. Okay, what we're going to be looking for is an engulfing candlestick pattern. With this pattern, what we're looking for is price to run down, okay? To have, in this case, a bearish run all the way in to our key area, and then to see a nice bullish engulfing candle. So this is just a picture perfect example. They don't always have to be this big. Some of them can be here. Some of them can be here. Some of them could have a little bit more wick on the end. Some could have a little bit more wick right here. The key that I want you to keep in mind is that it needs to really fill the placeholder of being an engulfing candle, okay? It needs to not be like a candle that engulfs it, but it has like a huge amount, like 40% of the candles like receding with just wick. That's not what we're after. We want it to look like a true engulfing candle. Just know that if you do decide to take trades where it's just not picture perfect, then you need to keep in mind you're being more aggressive, okay? And when you be more aggressive, sometimes you can have higher gains, but also you're most likely going to lose more trades. So then right here, what we have is a momentum reversal, okay? Right here. So what we have here is a double bottom. Okay, it's an off-kilter, what I call an off-kilter double bottom, because oftentimes you're not always, sometimes you will, but you're not always going to get a double bottom that is exactly in line. And usually when I'm looking for a double bottom, I'm looking for something like this, okay? So it's fine if that's there, it's fine if that's there, and that works right there too. The important thing is that the double bottom, when it pulls away, so when it makes its first point right here and then it pulls away into this territory, it's important that it comes right back. Okay, it's important that it's not like, so this right here, you may call this a double bottom, like, oh look, here's a point here, here's a point here, and that's fine. But when it comes to our executions and actually validating our trades, this is not the first point and this is not the second point. What has happened here is the bearish rundown. Price made its first point of the double bottom right here, pulled up, then pulled down and made the second point of the double bottom. This is about the maximum amount of consolidation I want to see when grabbing a double bottom. Ideally, the double bottom would push up and then it would just come straight back down. It would just be like boop, boop, this candle, and then the last candle right there, and then it would do its turnaround. Now, double bottoms are fantastic because what they symbolize, what they represent, is price has not only tried to go down one time, it's tried to go down 2 times, and it's being rejected twice. Price is saying, hey, listen, it's just not happening today. Now, everything is going to go against you at some point, okay? Every pattern, every, double bottom, you're not going to get every single double bottom. Just because it's a double bottom and it's a great sign that price doesn't want to push through and everything's validated, doesn't mean that the trade's going to work out. Remember, what we're looking for is an edge, okay? We're just looking for that, fraction of a piece that gives us an edge in the market. And then over time, then we become profitable. So that's what we're looking for. So keep that in mind. There is no holy grail type thing. As far as I'm concerned, I'm giving you the holy grail. The holy grail to me is simplifying trading so far down where you can roll up to your charts and understand what you're looking for and then execute on it and do it again and again. So with this setup right here, the second point of the double bottom is what we're concerned with. Okay, the first point we don't care about. This can look like anything. Okay, as long as it comes down, makes a point. It's not consolidating for a huge amount of time. We usually want to see it make a point, a few candles, and then jet back up and then pull back down. This second point is where we're going to actually get our confirmation to enter the trade. And we're going to do that in the form of either an engulfing candlestick pattern, just like you see here, or a momentum reversal pattern, okay, like you see here. So the momentum reversal, I want to break this down for you. Think of this pattern as having three different placeholders, okay? The first one, this placeholder is for a bearish momentum candle, and all that means is a mostly full-bodied candle. The second is going to be a doji, okay, the place of a doji candle. We're just looking for a candle. It can have body like this. It could be skinny and like have no body. As long as it has some wick on either side, then it is considered a doji, okay? Excuse me. So right here, let's find a different example of some doji candles. So this one right here, that's fine that it has a bunch of wick on that side, doesn't have any wick on this side, okay? And honestly, that's probably a little bit long. This one would work. This is fine. This has a little, its wick is a little bit longer than I would like. So just keep in mind, it's not that you can't use this as the doji. Just keep in mind, if you're looking for those more conservative picture perfect trades, this is probably not going to be ideal. You're looking for a little bit less wick on it, maybe to here. This is fine. This is fine. See how this one has more body? Let's see. This one's fine right here. So many of these will work. This one's, that one's probably okay. This one, something like this. Okay, so they're not always going to look exactly the same. You're going to get dojis that have a fatter body. The body comes up here and then comes down there. As long as it's not, as long as it's not like half the candle, half the bearish momentum candle, then I'm fine with it. It can look like a very skinny cross. It can be fatter. It can have more of a rejection style wick on one end like this one does. As long as it has wick on each end, it, relatively speaking, it resembles a doji candle, then that's perfect, okay? And then we're looking for a bullish engulfing candle. Now, this bullish engulfing candle does not have to engulf the bearish momentum candle. It does, however, need to engulf not only the doji's body, but also the wick of the doji candle. It doesn't have to be this big. A bullish engulfing candle could look like this. It could look like this is what I don't ideally want it to look like when there's just so much wick receding off the candle. Keep an eye on that. I mean, if 40% of your candle is just receded wick, then that is not what I would consider a bullish engulfing candle, even if it was engulfing the doji. This one right here, this one, this one, this one, this one right here, this one, this one. Okay, you get the idea that we're going for right here. It needs to be engulfing the previous doji, and it needs to be mostly a full-bodied candle. It's basically the reverse of this one, okay? So all we're doing is we're making this candle green, flipping it around and putting it on the side, making sure that it's engulfing this area. Now, they're not all going to look, picture perfect, exactly how you want them to and things like that. You've got options. You can wait until they do look like that. Like this engulfing candlestick pattern right here is picture perfect. But there are going to be times when the engulfing is still engulfing and it has the bearish rundown and we're at a key area, but it doesn't look quite as picture perfect. You're going to have to make those decisions on whether you want to take those trades or not. Some of those trades I take, some of them I skip. And it's perfectly okay to skip trades. Don't become a slave to the market where you have to execute every single trade, especially with trading this way, because you will have plenty of trading opportunities. Sometimes I've traded once in a week, sometimes 5 trades in a week. It really just depends. Okay, so I want to make clear that this pattern, I want you to understand, that's my MT4, I want you to understand the significance of what this pattern represents right here and how important it is. Because what we have here is price it's just coming at 1,000,000 miles an hour, okay? It's coming like a train, a bat out of hell. I mean, it is pushing, okay? And then all of a sudden, when it gets to our key area, it stops, okay? Dead in its tracks. And that's what the doji represents. It represents price is just like, whoa, I'm going to hang out for a second. I'm not sure what's going on. There's indecision going on. And the significance is price was zooming, man. It was jet biking, okay? It was going fast. It was going hard. It was ready to go. And all of a sudden there's just a pause, cricket. What's going to happen? Then having the bullish engulfing candle, that is the verification. That's the solidification that we don't know for how long and we don't know how far price is going to go. But we do know that in this moment right here, literally a moment because we're on the 1 minute chart, price has told us not only are we not going down anymore right now, we've paused and now we have completely reversed the other way. So that right there is our sign to enter the trade. Okay, that right there is our confirmation that we needed to say, okay, I'm in the trade, let's go. Okay, we can do something like this for now. Okay, so on the engulfing candlestick pattern, with the bearish rundown, and it is important to have some sort of a rundown. I'll show you in just a minute an example of price sharply coming to a key area, which is great, and then price basically consolidating, just kind of lazily walking up or down to a key area. And I'll show you the difference and what to look out for, because there is a difference there. So with the engulfing candlestick pattern, which would be our entry would be right here, then what I want you to understand about this one is that, again, we have momentum to the downside, and all of a sudden, almost out of the blue, boom, big engulfing candlestick overtakes the previous candle and shows momentum to the upside. So that's what we're banking off of. All we're doing is we're just banking off of, hey, we've had a rundown into the key area. Boom. This is telling me there just might be enough momentum to carry price upward. Okay, when this happens and we get a double bottom, and remember, this second point of the double bottom, this can be the momentum reversal, or this could also be on the second point instead of this momentum reversal. And you can also take these without finding a double bottom, okay? If you want to get in on just this candlestick pattern of the engulfing right here, perfectly fine. You want to just get an execution when price comes down and gives you a momentum reversal, that's absolutely fine. There's nothing wrong with that. If you want to wait for a little bit of added confirmation and you're like, you know what, I'm going to be really conservative, I'm going to wait and see if it gives me a double bottom, wait for the double bottom, and as long as one of those patterns is on the second point, you're good to go. With the momentum reversal, it's very similar, except for there's just one more step. The bearish rundown, price is coming in, complete stop, pause, turnaround. Okay, so they're both very, very powerful. I don't want you. I really, these are the two candlestick patterns to follow for executions. There is one more pattern, and I don't usually take trades off of this, but I will show it to you. Man, how many times have we as traders bought off touches, or bought off a single wick rejection? In my book, a single wick rejection is the weakest of all the confirmation patterns. Just getting a single wick, okay, if price comes down, gives you a single wick, so many times price will reverse and just fall through and take you out. So the step above that is a double wick rejection. Let's see if we can find a double wick rejection at a key area. Now the wicks need to be right next to each other, a double wick rejection. And again, I really don't utilize this entry very much, but it would look something like this. I would like it if this was a little bit more up here and looked like this candle. Let's see if we can find one here. Okay, I'm not finding one right now, actually. Okay. This is multiple wicks, but what I want to see ideally is more wick than body. And right here, I'm just not really seeing what I want to see with these. Right here. So this could be an option right here. See how there's more wick than there is body. You can identify that pretty easily just looking at that and saying, okay, they're rejecting this area. If you see double wicks, that is a much more aggressive way to trade, in my opinion, just because, even with the double wicks, I have found that the engulfings and the momentum reversals are typically more on point than the double wick rejections. The other one that you'll run into is what I call a double doji momentum reversal. So that is simply just taking the momentum reversal that we looked at right here, and then instead of one doji, you're just doing another doji, and then you're bullish engulfing. And I have seen those. I tend not to take those just because it seems like when they have a double doji, they're not as strong. That's what it seems like to me. And maybe that's because they're coming down with a bearish run, and then they get there and it's pause, and they still haven't made up their mind. It's still pause, and then they're like, all right, we're going to go this way. But that was kind of a long pause, and maybe that's why sometimes they, more often than not, then they just turn around. I don't know if I'd say more often than not, but I usually stick with just the classic momentum reversal. I just call it classic just in comparison to the double doji. Double doji is just something that I came up with because I saw it happen, time after time, again and again, where there'd be two dojis. But yeah, so I would stick with the engulfing candlestick pattern, the momentum reversal pattern, and then you can wait for a double bottom or a double top, vice versa. We're just switching the candles around, and then make sure that there is a valid point of entry, meaning a valid candlestick pattern on that second point of the double top or double bottom before you take an entry. And I want to show you here. So like a lot of the time what you'll experience is if price comes down, let's say it has this bearish run and it doesn't give an entry. Okay, let's say that there's no entry. Let's say that this engulfing isn't even there. Well, then instead of walking away and saying, okay, well, there's nothing there, you can go ahead and wait a few minutes and see if price does a nice pull out and then comes back down into the key area, giving you a double bottom or a double top. And then you're just tuning into, okay, do I have a momentum reversal or do I have an engulfing candlestick pattern? That's it. It's as simple as that, just over and over and over again. And so, yeah, so those are going to be the entry patterns, and that is going to be how you validate your trades using the 15-minute. Now, when it comes to order blocks, it's going to be a little bit different, because what we're looking for is a break of structure. Here we don't care about structure breaks. This is different. We're just using our candlestick pattern. So let's go over to the 10-minute. And let's go to real time. And let's see here. Looks like we've got a 10-minute order block right there. Remember our order block, just looking for a sell before a buy that has a dramatic move away. And we're waiting. We're not buying on a touch. We're not doing anything crazy. We're sitting back. We're going to validate everything. Okay, so with this, I trade a lot of the 15-minute and drop down to the 1. So for me, I'm immediately recognizing the patterns. I'm immediately, okay, an off-kilter double bottom right here with a momentum reversal right here. See how this one isn't quite, it's actually a good example, it isn't quite as picture perfect as the last one, okay? The momentum reversal, this candle, I'd like it if it was more full. The doji looks great, no problems there. The engulfing candle, it still looks really good, even though it's not as picture perfect as the other one. So, you can wait for the picture perfect stuff. This one, I would say, yeah, I'd take this trade if it was at a 15-minute area. I'd go ahead and take it. But this is probably as far as I'd go, really, because I want to see more body on this candle. And I'd also like to see more body on this one too, even though that's all right. So there's a quality control issue, and you as a trader, you're put on the line in this quality control factory, and it's your job to say, okay, stamp of approval, we're moving forward, or I think I'm going to wait this one out. Okay, so let's see what happens here. So prices come down. It's tapped the order block that we're looking at. So now we're going to refine it. Okay, we're going to refine it into a 1-minute order block. Now this is a unique situation because usually there'll be a green candle somewhere that's kind of close by, but in this case it's all the way up at the top, and what we really want to see is some kind of break of structure happen. And in order for us to get that, it would be all the way up here. So I really don't know if that's going to happen, but let's just kind of see what happens. Okay, it breaks it. Let's go to the 10-minute. I'm not sure what. Okay, so we go all the way up. Okay, so there was no entry right there. And as a matter of fact, hold on a second. Let's just so it's easier to see, and easier to delete, I'm just going to drop this horizontal right here. Yeah, I probably wouldn't have plotted that in as a potential support level. Probably would have plotted this one in, so price wouldn't have quite come to that area. This one right here, that's completely fine. Actually, I just want to drop down and see if this was a viable trade right here. Let's see. And it probably was. Let's see, got some rejection on the wick there. So I'm not sure if I would have taken this trade, because we are, if you take this out, you can see it a little bit more clearly. We're a little bit past the level of support, and I'm going to teach you something about utilizing wicks in your support and resistance that's pretty important to take into account. It won't always happen, but when it does, it's very good to have it in mind, and you can understand why price is moving, even though it's a little bit below the level that you have marked out. So with this one, you could have taken the trade, but you just want to keep in mind, I probably, now looking at this trade, let me see where the wick is. Actually, let's go to the 15. Oh, yeah, okay. Yeah, I probably would have taken this trade. Because we've got acting as resistance right here, break above, retest, nice push away, and then we've got our candlestick pattern running through our key area. Okay, it's okay if it's not, the bottom of the pattern doesn't have to come perfectly to the key area. As long as it's running within it and things like that, then it's completely fine. The other thing that I wanted to tell you though, before we we continue on with order block validation is, let's see, I actually just had an example of this today. Okay, it was right here. It was right here. So this is our key area. Price made this high point before pulling down and coming right back around to this key area support, and then it pushed back up. But if we drop to the 1 minute, what you'll see here is that when price pushed up, it's almost as if, you know, we're kind of waiting for a retest or something like that. And when it gets up in this area, it's like, you know, look how far away it is from the key area. What we want to take into consideration is the wick on the original point of the key area. So if our key area is right here, which it is, and we've got a 15-minute wick going up, then we definitely want to map out that wick. Now, sometimes it won't come into play and price will never make it there. Other times, price will blow right past the wick area, but here's the thing. Sometimes it'll give you a pattern right at the wick area, and as long as the pattern is running through, okay, see how it, if we pull out the fibs right here, I'm just doing this for example. You definitely don't need to pull out your fibs or anything like that. Look how it's you know, almost perfectly. I mean, it's like 50%, you know, of the pattern is below, and it's probably about you know, 55% of the pattern is below, 55% is up there, and that really doesn't matter. I just wanted to show you kind of a little bit of an illustration there that, you know, we've got the momentum reversal, we've got our bullish momentum candle, we've got our doji candle. This one's a little fat, but that's okay. So again, it's not the, you know, absolute picture perfect, but I would still take the trade. In this case, let me see what the stop loss would be to make sure that I would take the trade. Yeah, I would take the trade. Oops. Okay, so, and now we've got our bearish engulfing candle. So this is running right through the wick area. Let's go ahead and take the trade. So keep that in mind when you're plotting your levels. It won't always happen, but if you do have a level that is like this, especially on your swing highs and your swing lows, like right here, see, oftentimes the wick will already be taken into account by the general key area. But just to give you an illustration, like for instance, if you would go like that, which I don't recommend because it's just too skinny of an area, then you would mark your wick like that. So either price could give you a turnaround here, or it could push down and give you a turnaround here. And when a lot of traders would just be like, oh, you know what? Price is already pushed way too high. You know, look at the 15-minute. Our key area is right here. Look how high price has pushed. You know, it's out of the league here. Just waiting for a break and retest, and then they're totally not taking into account the candlestick pattern right here that's telling you, hey, we're reversing and we're going down, and we're not even fully out of the price point here. We're not even fully out of the key area because this is really the key area. We just don't want to have these huge fat key areas, you know, really blocky on our charts and things like that. So what we do is you know, we just kind of take the key area, map it from the candle bodies, pull it up a little bit so it's got a little bit of space. It's not too skinny, not too fat. But then when you have a wick right like this, make sure that you map that out, because that could be a potential turnaround point, just like it was right here. And actually, if you look at this trade, which just happened today, really, really nice trade. Very, very nice trade. Let's see how long this trade was. So about 3 hours. It's about 3 hours for that trade, okay? And so this brings me to another point, is that I want to talk about the entry points for these patterns, and we will get to order blocks, but this is something that definitely needs to go over. So you've got a few choices for your actual execution when you're doing your manual execution, when you're pushing the button, that kind of a thing. And number one, it is always going to be at the finish of the candlestick pattern candle. So in this case, the finishing candle is right here. It's the bearish engulfing. So to account for spread, I really never put it right at the candle. I always kind of move it down just a little bit. On different pairs, it's going to be different. You know, on euro dollar, it's going to be very, very low. On euro yen, it's going to be a little bit higher and things like that. So, you know, always take into account that the spread is going to push you up or down a little bit. So, you know, when you're taking shorts, it's going to push you down a little bit. When you're taking longs, the spread's going to push you up a little bit. Just take that into account. And then, as far as targets, we're going to talk about targets in a little bit. We're going to talk about take profits and stop losses and management and all that stuff. But right now, I just want this to get in your mind that when you take an execution, you are only getting in on the last 2 to 3 seconds of that entry candle, okay? And in this case, it's that candle. And then with our engulfing, we'll just use this engulfing as an example. This wouldn't actually be a trade that we would take, but just to use an example of the engulfing, you would get in last 2 to 3 seconds of the engulfing. Sometimes what you'll find is that when you get in on one of these engulfing candles, or for that matter, the momentum reversal, you know, either way, it doesn't matter. The candle will be engulfing when you execute the trade, but let's say that you execute it, you have 3 seconds left, boom, 1, 2, 3. That candle can pull back a little bit to the point where sometimes it's either in line with your doji or with the candle that is previous it, and it wasn't like that when you executed the trade. And you know what? It happens. There's nothing you can do about that. You cannot do any better than getting in the trade in the last 2 to 3 seconds. And the reason why that is such a hard and fast rule, and you will want to break it, and you will say, oh, I better get in now because this thing is just blowing up. And if I don't get in now, even though the candle has 20 seconds left till it's closed, it's going to be out of bounds. It's just going to be, my stop loss is going to be too big. It's not going to make sense to make the trade. Sometimes that's the truth. It's going to be too big in order to make a logical trade. So let me give you an example. Again, we wouldn't take this trade, but let's just use it as an example for us. Let's say that, you know, let's say this engulfing is huge. I mean, let's just say it's all the way up here, okay? Let's say this is our entry about, and then the engulfing candlestick doesn't even stop. The end of it's like right there. So this is all one gigantic candle. That's a big candle. Okay, that's a 12 pip stop loss on the 1 minute, which is okay, but at this point you're probably looking at going for a 1-to-1 because price has got to move a long way and cover a lot of ground, 12 pips just to get you to 1-to-1. So if you're going to take those types of trades, you really need to keep that in mind. Whereas, you know, if you've got a 6 pip stop loss or a 5 pip stop loss, well, you know, I mean, then by the time it gets to 1-to-1, you're in profit. You've only gone 5 pips. You've got some management room and things like that. But the point is that when that candle closes and you get in on the last 2 to 3 seconds, you know that you gave it your best effort because every candle on the 1 minute has got 60 seconds, right? So we've got 60 seconds. If you get into a candle when it has 30 seconds left, that candle can go from looking like an engulfing to curling all the way back and looking like a rejection candle. I mean, it can even go from green to red, from red to green, and you will be sitting there. Oftentimes, if you don't listen to this rule, then what is going to happen to you over and over again, and I know this from personal experience, is this will happen. Let's see. Okay, how about right here? So we'll just go right here. So price comes up. Let's say that it gave you like a doji right here or something. Pretend that there's a doji in between these two candles. And then you've got this candle and it's going down and it's red right here. Okay, and let's say that it's got 20 seconds left. You say, oh God, I could get in at such a good price. If I just get in right now, I'll be able to have a little bit more room with my stop loss. I'll make a little bit more profit on the way down. I'm going to get in right now because, I mean, it's obvious. It's turning red. It's only got 20 seconds left. Let me just get in. This is a great resistance level. And this is often where traders will put a large amount of faith or of significance on a resistance or support level, and that's why we're not doing that. Okay, we literally, our key area is nothing more to us than a clean space where price has already been. It's very, very clean, and then we're just validating. Okay, we're not saying, oh, this is such a strong level, such a weak level, none of that. And then what will happen is you'll get in the trade and it'll completely reverse on you right there. Completely reverse, man. So really, I mean, as much as it sucks and you want to fight it, just accept it, and then you can just sit back and you can relax. You can just relax for 55 seconds, for 57 seconds. All you're doing is you're just looking at the chart and you're just hanging. You're just like, all right, okay. Well, as long as that's still engulfing, as long as it doesn't have a big old receding wick, okay, we're good to go. Mouse on the manual execution. Boom, done, in. Throw in the stop loss, throw in the take profit. That's it. Pardon me if I got a little bit too much spit in my mouth, man. I've been eating cookies and milk over here. Yesterday was a holiday, so I'm eating some leftovers. Okay, so now let's jump into the order blocks as we were before with validation. So we went over that one example where price never came back, and that'll happen. And consider that a gift when that happens, because if price didn't come back, it means that it's an opportunity for you to say, okay, great, I did my job. I mapped out the order block, I waited, price came back. I looked for a 1 minute order block, which I'll tell you about in just a moment, and it didn't come back. Great, you did your job as a trader. You waited to execute a high quality trade that didn't come in your favor. There's no reason to get upset. There's no reason to have a bad attitude or, oh, I can't believe I waited for this trade. And when you're waiting for things, I'm going to simplify it for you. You're just going to set these alerts, okay? You're going to set alerts so that you don't have to stare at the screen for 5-6 hours a day, okay? Okay, so let's see if we can find a recent order block here. This one, actually, right here. Okay, so we got our 10-minute order block. Now, you will find these on the 15-minute as well, okay? See? You can still see that as an order block. Not as dramatic of a move away. And so, again, we got to go back to picture perfect. You can always wait for the picture perfect stuff. Your win rate will be higher. But again, your quality control. I'm going to teach you how to do this. You'll see the types of trades that I take. But every trader is going to be a little bit different in the way they manage, a little bit different in the trade setups that they're looking for, okay? So here we go. Let's drop down. Let's actually go to the replay to make it a little bit easier. Let's go to the 1 minute. Let's see, the first time that price touched was right here, okay? So with that touch right there, what we would want to see is this area broken, because that's the first piece of structure that we have the opportunity for price to break. And what that means, all this means, is when that structure is broken, price has just shown us, hey, we've got some upside momentum. If it just comes back to this area right here, it's not showing us upside momentum. It's simply just showing us, hey, just pulling back for a retest, just, price as usual here. And so there's nothing to do here. So then now let's see. So price pushes deeper in, comes up, doesn't push any deeper, finally breaks structure right here. So this is not a clean order block setup. This, I probably wouldn't have taken this, and here's the reason why, okay? See how there's always a learning experience? This is why it's so important to go back and review your own trades and keep a trade journal, take screenshots. share them, ask questions, really think about things outside of the box, because just because you lose a trade or you didn't take a trade or things like that, that's a learning opportunity right there. Okay, whether you win a trade, whether you lose a trade. So right here, I probably wouldn't have taken this trade because what we're seeing is price has pulled up with maybe the potential to break structure. Okay, it doesn't happen here. And before it doesn't happen, what happens is it comes back and taps this potential order block. And so it does it, and it hasn't broken any structure. It would need to break this structure before we got interested, before we said, hey, there might be something here, man. Let me check this out. Let me investigate a little bit. We just, unless it breaks the structure, we just don't care about it, okay? So let's see. So then at this point, what happens is price goes right here, and then it finally ends up breaking, and it leaves an order block right here, which gets completely, disrespected, and it comes way down into this one. And I just wouldn't have even touched this trade for those reasons. Price would have needed to come into the key area. I'll show you. Come into the key area, break some structure, and then I'd map out this order block, come back, tap it, and then do its thing, and then I'd manage the trade on the way up. So let's go ahead and see if we can find another example. Once you start getting order block trades, it will change the way that you see trading. You will go, oh my God, I cannot believe, how can I get this accuracy? How is it that I can get these kind of stop losses with price coming right back into this target area? It happens. Okay. Okay, so we got one right here. Let's see. Okay. Okay, so we can see, to keep it very, very simple, buy before a sell-off. Okay, a nice sell move away. And you know what? Actually, on that other example, real quick. Okay, no, we're good. We're good. We're good. Okay, so let's go to the replay here. Let's go to the 1 minute. Comes back. And I don't think that it actually comes back. Nope. Okay. So once price really starts to get out of range, then I'm not following it anymore. I'm not going to sit all day and follow it, because at that point, to me, it's turned into something else. It's already found a different point. Price has gone from an area of resistance right here to a point of of support right here, and it's just off to the races, doing its own thing. So when you find an order block, you want to follow price and make sure that it makes sense to get in. You don't want to be sitting here till the cows come home, and you're sitting on your little order block, down at the 1 minute, and price is just gonna blow right through it. So keep that in mind. Okay. So right here, there's nothing to take. It hasn't even left us. It hasn't broken structure yet, and it also hasn't given us an order block around this area either. We need something that's untapped. That's not been mitigated. Mitigation is simply just when, let's see, let's find an example of it. See this green candle right here, this buy. We'll see how price has come back up into it, and it's come back into this green candle space. That's mitigation. So that is basically price picking up momentum from this area to use to the downside, okay? And it just keeps doing it over and over and over again. So big candle, mitigation, and you'll just see it keep walking down, okay? So right here, mitigated right here, mitigated right here, mitigated. Okay, it's just that's really all you need to know about it. I mean, it can just be so complicated, but that's all you need to know. It's just when price comes back and when it does mitigate it. So let's say that let's say that we got an order block right here. Okay. Actually, hold up just a second. Okay. Let's say that this is not our order block, but let's say that this was our order block just for the example. Let's say that price pushed further and then it tapped it. It would be mitigated. Okay, it would be used up, that sort of a thing. So if price came back, number one, we'd be very leery of it, and two, we would want it to push deeper into the order block, then leave, break structure, then come back if it left a clean order block. Okay, let's go back to the 10-minute. And I would say something for order blocks. Look for the most obvious order blocks. Don't try to make anything happen in the market. Just look for what stands out to you. Just look for like, oh shit, look at that. Wow. Let's see. Here's an area, but it really just doesn't have that nice dramatic looking, contrasting move away. That's what I'm looking for. This one does, but also price pulled away and then came right back and, mitigated it. So I'm not keen on it. Whether it worked out or not, it doesn't matter. Got to look for the same things over and over and over again. So, whoops. So here is, yeah, here's one. And you can see that, right? You can see the sell, dramatic move away. Okay, so nothing happened there. It tapped the order block, but it didn't come back. Here it broke structure. So before the structure, let's see, our structure was right here. Yeah, so it did break some structure. And then our order block would have been right here because this is the sell before the buy that has not been mitigated, or price hasn't come up and then come back down and tapped it. And it has not come back. Okay. Actually, that one came back right there and tapped it. You can go back in your own charts to the 10-minute, to any pairs that you like to trade. Make sure that they're Forex majors. The only pairs we're trading are Forex majors. We're not doing any, crazy exotic pairs or, hey, it's all about volatility. You don't need any of that stuff. I mean, you can literally just trade Euro USD. You can become an expert on Euro USD and just continue to trade that pair over and over again. Let's see here. I'm sure I'm missing stuff. I'm sure of it. But let's just keep going right here. We want to see a dramatic move away. And also, if you can see a break as well, if you can see, for instance, like this right here, a break will increase the quality of your order block. Because what is it showing you with that break? It's showing you it's serious. It's showing you there's momentum. So keep that in mind. Again, it goes back to picture perfect. You want to take some without a break, that's okay. You want to wait for the best ones, most likely wait for the break. Okay, and that one just kind of out there now. Let's see what happened though. Yeah, so the order block looks like there is an order block there, and it looks like there is an order block there. Now, which one do you use? I wouldn't have used either one of them because price pulled so far away. It went up to this level of resistance and it's just kind of doing something else now. So, you know, if it doesn't, if price makes like a dramatic move like that and stuff, I'm just gonna let it go. I'm not gonna try to follow it and make something happen. Let the trades come to you. You can be relaxed when you trade and just wait. Just wait and just watch, just set alerts. No need to push anything. When you start pushing things, that's when you start really losing your butt. Okay, so price comes back, taps here. Then we're looking for a break of structure right here, which we get. And then, where do you think our order block is? Our 1 minute refined order block. It's the sell before the buy. Now, as a good rule of thumb, you want to have some extra space between the actual order block, the 1 minute refined order block, and your stop loss. Okay, you want to make sure that you've got some form of space going on there, because sometimes it'll wick lower, sometimes it'll go as low as the previous candle before the order block, or if you're going short, you know, then this candle, just flip it around, it'll be on the upside and it'll go, you know, further up. So just be aware of that. And then what I want to teach you to do to become a little bit more profitable with order blocks is that you will miss some trades when you do this, but this will also enhance your RR. So you can go to, see, where's the 50%? It's about right there. Okay, so you just drag in the fibs. It doesn't even matter if you take them top to bottom or bottom to top for this particular thing. And so what you've done here, I don't remember exactly where we were, maybe 8.2. Let's say that we're going to go right there, just for this example. So you've got a 1 to 2, 5 RR. Okay, we'll just say 1 to 3. But now, by going down to the 50% level on the fibs, which oftentimes, I mean very, very often, at least with the 10-minute order blocks and jumping down to the 1 minute as we're doing, price will come to that 50% mark. Okay, not always, but it really often will. And so look at that. We went from a 1 to 3, less than a 1 to 3, to an over 1 to 4.5. So there's a lot of power in doing that. That's not something that you have to do. It's just a tool that you can utilize. As you get going trading and demoing and things like that, you'll find the things that start to work for you as you test them out. You will find the things that you naturally gravitate towards, what you like, and that will all come to you, okay? So that's just kind of a nifty little thing for increasing your RR, and it makes kind of a dramatic impact on it. Okay, let's look around here. Okay, let's grab this one because this one really sticks out to me like a sore thumb. I mean, this thing is, look at the drop on that sucker. And I should say, yeah, no, this is good. I was going to say something about the wick, but actually we're good. Okay, so let's go ahead and drop down to the 1. Candle comes in here, and we're looking for our break of structure, which would be here. Okay, so if there's no obvious pullback, like this is an obvious pullback, this is an obvious pullback, the minimum break of structure that I will go with is at least a red candle up in the bullish run up being broken. Like something has to be broken in order to be a catalyst for taking the actual trade. If it's not, price just isn't telling us that it's ready to go down or anything like that. Okay, so it doesn't happen. And also, if price is pulling down like this and then running through, once it runs through, I mean, if there's like a little, wick running through, like a little one or something, that's fine. But it's already made moves past the actual order block, so it's over and done with it. It's invalid now. Okay. This looks like it might be something. Buy before the sell. Nice move away. You can see the contrast. Came up, tapped the order block, and then it moved down and it broke structure. Let's see, where did it break structure? It broke structure right here. So map that out. Okay, and it never came back and tapped our 1 minute refined order block. And that's perfectly fine. Perfectly fine. Every opportunity is an opportunity to learn something, to save capital. No need to force things. Okay. Okay, order block would have been right here. Broke structure, never came back and tapped. It is so much better to just let the market determine what it's going to do. Follow that. Follow what the price action is telling you rather than just getting in this loop of trying to make these trades happen and get a certain amount and just it just becomes a mess. Okay, let's see what we've got here. Okay, so price comes back. This is its first tap. So it would need to break this structure. Then it pushes deeper into it. So it would at least need to break that structure. Doesn't happen. Deeper. And deeper. Okay, so then it breaks structure. Leaves an order block right here. This order block has actually come... Actually, let's map this out. Hold on a second. 181 is the high. 180 is the low. So this actually did tap that. So this is the order block, okay? Because this has been tapped. So then we're just going in the next order that makes sense. This has got to be the order block, right? And guess what? It breaks structure, and then price comes back and taps. Okay, we can do something like that. Actually, I'm going to widen this so we can see it a little bit better. And let's see how this changes the RR. So we've got 593. Oh, so this one actually wouldn't be tapped. I mean, I just realized this won't even be tapped. But you know what? Just for sake of doing it, getting in a little bit of repetition. Wow. So a 1 to 9. 1 to 9 right there, just from that little trick. And even without it, we're looking at just under a 1 to 6. And this is on the 10-minute chart. Man, one of the first courses I ever bought from about trading, actually I think it was the first course I ever bought on Forex trading, taught me how to trade from the higher time frames, taught me how to plot out support and resistance areas, and you would have to wait sometimes weeks to take a trade. I mean weeks to find a daily divergence. They went with kind of the monthly, weekly, daily sort of a walk down. It would take so long. And then when you finally found a trade that you could execute because the moon and the stars and the sun had all aligned, then, you know, and the EMAs had crossed just right and all the indicators were pointing you into the trade. When you actually could execute the trade, you were going for a 1 to 1, 1 to 2, or 1 to 3. Those were the main ones that you were going for. Now, they had examples where they were going for more and things like that and for bigger trades, but I never found those trades. I actually never found those trades. So this is pretty damn cool to be able to trade the 1 minute chart and just get numbers like this. Like, just, I mean, imagine if you could just, you know, take a trade like this every 10 days. Can you see how you don't have to be a slave to the charts anymore? You don't have to be this person that's cooped up in an office, sweating over their keyboard, heartbeats pounding. You've got to make this happen. You've got to figure this out. You know, I've been there, man, and I don't want you to have to be there anymore. Okay, so we got this one. And by the way, you can actually see here, let's go to the 10 minute and reset. Let's see. So if we were going for this recent 15-minute high, I mean, you can really see how you can get some big numbers with this method of trading. I mean, right here we're at, you know, 1 to 876. If we go back to about that 50, you know, actually I think it's down just to somewhere around there. 1 to 13, 1 to 12 and a half. Those are some really big numbers right there. And of course, you know, in the management section, you will learn you have different options on how to manage trades like that. Okay, let's find another one. See how this right here, oh, it's a sell before a buy. Well, look at the buy. I mean, it's not dramatic. It's not it's not really contrasting and things like that. Now, if this hadn't come back and mitigated this, and all we had was just kind of this one continuous move up without mitigating this, well then sure, you know, then we'll grab it, we'll map it in. But you know, in reality, it's just the move is just from here to here, and then it just comes back and taps the order block. So we're just not interested in it. We're just looking for high quality over and over and over again. And one thing to point out is, look at all the order block trades that we've put on so far. How many of them, you know, did we lose? Well, we probably didn't lose any because price either didn't ever come back, or it came back and tapped our order block and went. Now, sure, you're going to lose trades. Okay, price is going to go against you. It's going to be a pain in the ass, you know, but you're going to get through it, and it's not going to be a pain in the ass to you forever, because you're going to realize, okay, I got to have a certain amount of losses before I can have, or as I'm having, a certain amount of wins, and it'll all just ebb and flow. Okay, but it is a very, very nice way to validate your trade, and it's really built into order blocks as well. Okay. See how there's a wick after this one? I'm taking that into account, and you can also take that into account. Like right here, well, this one, I would just map the candle, but here's the buy, do not be afraid to map the wick of the after candle of the post buy candle. You can map that wick out, no problem. All right, let's see what we got here. So that's fine. The wick's coming through. That really doesn't bother me. Okay, breaks some structure, breaks more structure. And this is our order block, and it never comes back. See, I like that, because so many times, man, how many times you've been stopped out on a trade that just comes back on you? Let's go to a different pair. We've got this one right here. I don't know if we already went through this one or not. I mean, I don't think I've put this one in the course yet. Okay, so the cleanest order block would have been this one. Right there. See how clean it is? By clean, what I mean is, see how, like, okay, so we have this order block here. Price is moving down, but then you have these wicks coming back and jutting back up into the order block. I think that that's why price didn't come back and tap it, because at this point it was just mitigating it. It was just going down, mitigating it, using the momentum to the downward side. See how we have this one and nothing has happened? It's just straight down. It's beautiful. It's just literally a buy before a sell drop. So now it gets mitigated. Price comes back, pushes slightly deeper into the order block, and then jets. So, and also I should note that these are not only manual executions, they can also be limit orders as well, and we'll go over that in another section. But let's find one more. Let's find another. Let's try this one. It's just catching my eye how it's lining up across the chart. Okay, price comes in and taps. So we're looking to break this area. Actually, excuse me, that's not right. We're looking to break this area right here. See how it's kind of got that, hey, we're consolidating, we're just hanging out. But they are green candles. So pushes in, doesn't break it, pushes further. Now we're looking to break, this area, this area. We'll take that area, since I believe this is how it works out. Let's see, price pushes up. This is mitigated, okay? Price comes back, taps it, so that's done. And then it comes up, it breaks this structure. You can go with that. You could also wait for a little bit more structure to be broken. If we didn't wait and we just went, hey, look, it broke something, great. By the way, with all this confusing stuff, it broke minor structure, it broke major structure, all this stuff, honestly, the way that I look at it is, did it break some structure? Okay, great. Did it break more structure? Okay, that's awesome. So, oftentimes I'll just wait for it to just break something. If it breaks more, great. That's the more conservative way to trade. A little bit more aggressive is, hey, I'm just waiting for it to break something. You can choose what you're comfortable with. Okay, so that would put us in looking something like this. Okay, so price would have broken this, came back. Now what if we waited? What if we waited for this whole thing? So price would have broken this, it would have come back, it would have mitigated this order block, pulled up, then it would have gone just a little bit deeper inside the order block, grabbed momentum, broke more structure. Would it have left something behind? Would it have left an order block behind? Okay, let's see. Where did it break its more structure? Right here. So this one wouldn't have been left behind because it pulled down and mitigated it. This one would have left this right here. And you can see that, right? You can see how this damn thing keeps getting in my way. Okay, you can see how, this one, after it pulled up and it broke, okay, it broke more structure. Then we had this one, but look, it came down, got mitigated before it broke the structure. So the only one before the structure break that's valid is this one. This is the only one that hasn't been mitigated. And so there we go. It's mitigated right there. Okay, we'll put that back on now. See how if we had our stop loss, like, hey, I'm just going to scooch it up right to there, it would have been a stop out. So we want to give it a little space. We want to give it a little bit of breathing room because we don't know what's going to happen. We don't know how this is going to go down or anything like that. Okay. Okay, so those would be the trades, and in this case, they're stop outs. It happens. It's part of the game. Take it on the chin. With this one, what we could have done, and kind of what I was trying to say in one of the other examples, is that you can take the low and you can go below the low. Okay, sometimes that will be where your order block resides, your 1 minute refined order block, and you won't even need to go any lower. And other times it's a little bit lifted. It's a pip or two off, and so you'll have to really pull down your stop loss a little bit. 8.6 stop loss. 8.6 pip stop loss. So let's see. Let's use this tool. Our fibs. First off, let's see how this trade plays out. Okay, there we go. And so if we pull it down, so we can take it from a 1 to 2.9 to a 1 to 4.35. Man, it never ceases to just surprise me how much of a difference that can make. And again, that is not something that you have to do. And honestly, if you're just starting out, if you're just getting the hang of it, that's not what's important, okay? What's important is building a track record of consistency, learning the concepts, marking out your levels, finding your order blocks, okay? Waiting for the confirmation, waiting for the validation. Make sure that you've got enough room in your stop loss. Make sure that you're targeting the right areas. Take pictures of your trades, okay? Right here, look at this. Copy chart image, okay? You can just grab that, throw it in a Google Doc, make some notes. Hey, oh man, I really screwed up on this, or wow, I should not have entered this trade. I didn't realize it till now. Or hey, my stop loss was too tight on this one. Or hey, this was just a solid loss. I was right on the validation. Great stop loss. Entry was solid. Take profit made logical sense. Yada yada. You get the idea. This is what is so important and is going to build you up from square one to go to square 10 to go to square 1,000. Okay, so this is fun, man. Let's find another one. Okay, this one stands out to me. I mean, look at the drop right there. Very clean. A clean machine. Okay, drop down to the 1 minute. This is the first time that it touches. It does break structure. This is something that you're going to want to keep kind of you're going to want to make a decision on as you get into this, okay? Please don't feel overwhelmed. I know this is a lot of information. I'm boiling it down very simply for you. These videos are here for you, and you're going to see this over and over and over again in your own trading. So, you know, just relax. This is a journey, okay? This is not about, oh shit, I need to become really, really super good at trading over the weekend, okay? We're not doing that. This is the long game. So, right here, we have a structural break. Is this enough structure to be considered a break? For me, I would say yes, and the reason is because we've got a body close below the structural, below the structure that we wanted to break right here. We got a body that is hanging out of a candle. If it was just a fraction of a wick, like let's say this, let's say that this is what it was. That wouldn't be enough. That wouldn't be enough for me. That like the little tiny wick, there's price discrepancies between TradingView charts and MT4 charts and all this stuff. So if it's going to be, that small, I'm not going to consider that a solid break, okay? I will consider that a good enough break for me to enter the trade though. And then as we see here, here is our untapped order block. Why is this our order block? Because it's untapped. It's not mitigated, and it's the furthest one out. See how this one isn't mitigated either? What's the difference, though? This one is close to price. This one's on an extreme way up here. If price taps this one and goes, we're not going to get in the trade because it's already going to have left without us, right? But if we get in this one and then price is like, I'm going to go ahead and mitigate that order block way on the extreme. Yeah, the one that was part of this whole move back here. Well, then we've just lost the trade. So I would much, much, much rather sit on the extremes, have price come up, tap me in, and then go from there rather than just have sort of a FOMO mentality, just sort of a fear of missing out mentality. So you do not want to have that. So let's go ahead and see what happens here, and we'll do both the whole profit target things as we've been doing, just so that you can kind of get a feel for that. And it's just freaking cool to do. Okay, and you can see here, let's go to the 10-minute. Man, this is fun stuff right here. We can go to the 10-minute, we can go to the 15-minute, really, it doesn't really matter. Okay, so right here, what we're doing is we're targeting a 1-minute low. Okay, so this is our 1-minute low, just recent price. What we can do, if we want to, and this is more of this in the management section we're going to go over, but we can also target a 15-minute low. So let's just do that for kicks. Let's see, that 50 is really small in there, man. I don't know. Gosh, is that it? Something around there? Something around there. Anyway, 12 to 13. Okay, 12 to 13. Taking a 1 to 8 to a 1 to 12 to 13. A 1 to 8, you can see why you don't need to, pull it back with the fibs, but you definitely can. And I encourage you to try all of these different things in your trading. See what's going to work, man. You may like order blocks better. You may like support and resistance better. You may, just think that both are great and you want to do both, maybe different times, different sessions. Maybe you don't care. Just whatever comes your way, you're going to put that trade on, that sort of a thing. So you will definitely learn how to do that in your own trading. Okay, let's take this. So from a 1 to 4.5 to somewhere around a 1.65. Man, absolutely love seeing those numbers. Okay, so let's go ahead. Let's find one more, because I really think that you're getting the hang of this, and I really think, it's simple. It's just so simple, okay? And there's no need to complicate it. There's just no need to come up with a whole dictionary of terms surrounding it and all that stuff. I know it's probably fun for some people and they like that, but I just like to keep it simple, man, so I can understand it. It just gets too complicating if it's not. Okay, let's run this a little bit and see what happens. Okay, so I'm just going to skip out on this one because it probably doesn't work out. It probably doesn't even give us validation or leave us an order block, or it's a stop out. Let's just see for kicks. I mean, let's just take a peek. This makes backtesting really easy, just really simple. Okay, break structure, and look at that. Never really breaks the structure that we need to see broken, because before that, I mean, it had this opportunity to break structure, didn't do it. Had this one, didn't do it. And by that time, it's out of the zone. That isn't a little wick right there. Those are bodies closing above the order block and hanging out and consolidating. And so there's nothing there. Let's see. Also, we want to keep in mind to look for a break as well. Again, you don't have to. You want to be a little more aggressive, more conservative. Look for a break. I do both. Let's see. This level looks really obvious to me. Let's see if... Yeah, that could potentially be something. All right, price comes up, break this structure. Ooh, could we have a loser on our hands here? Okay, breaks the structure. Again, this is more aggressive, just a single break. You want to wait, be a little bit more conservative, wait for a little bit more to be broken. Actually right here. And we've got our order block. And notice how I'm taking into account the wick, okay? So the wick after the order block, I'm also grabbing that and putting it in. Oh, and it looks like we might get tapped in right there. $12 stop loss. Now, obviously, if you would have had your stop loss like that, you'd be stopped out. Okay, you know, if you would have had your stop loss like this, it's too big. It's probably too big of a stop loss. So if you would have had it somewhere around there, then you probably would have been okay, depending on the time of day. Let's see. Yeah, you probably would have been fine. So this is just a little bit before London opens. Okay, so let's see what happens. Looks like it's found some support there. Okay, so this brings me to just a word on profitability. What I've found is that being profitable has so much more to do with the way that you manage a trade versus your win rate, okay? We'll talk about that in the management section, but keep in mind, depending on how you manage this trade, this could be a full loser. This could be a partial loser. This could be a partial winner, or it could be you could have taken multiple partials off of this, or it could be a break even. So just keep that in mind. Okay, so then if we do our little trick here, I'm not even going to use the fibs anymore. I'm just going to kind of eyeball it to the halfway mark. So about 1 to 7, and 1 to 4, 6. So, you know, when you're going for 1 to 4, 6, you know, 1 to 7s, things like that, you can really see how, you know, hey, when price gets to 1, when price gets to 2, partialing little pieces of that out can really add up over time. Okay, so I know I said one more, but let's just see if we can find one more, and then we'll stop. Okay, so I'm taking the wick into account right here of this sell, of the actual green candle, but I'm mapping out the sell order block. So let's see what happens here. So, okay, a little wick downward. That doesn't bother me. A little wick is okay. We need to break some structure. Okay, let's break some structure right there. Let's break some more structure right there. got an order block right here unmitigated. Let's see what happens. I'm not sure if it hits it, but let's just go for kicks, because I know when I first started trading like this, then I thought it was so cool to be able to see, to put my take profit tool on here and then see price actually come down and tap me in, man. I felt like I was telling the future. So we've got some different options. I mean, we could go all the way to the low. We want to be conservative. I think I'm going to go right about there, and we'll just kind of see what happens, you know, if we get tapped in. Nope. Okay. No tap in. Okie dokie. Well, I kind of wanted to find one more that actually did tap us in. Let's see. Let's try one more pair, because we've done 2 pairs so far. Let's make it a third. See if we can find one more example. Well, actually, I've got an example. Okay, so the example resides. Which pair did I take that on? Oh, this one right here. Okay, yeah, so this was a Euro-Yen trade right here. And so I want to show you, I don't think I broke this down for you yet, but I want to show you this because it's a beautiful example of just key areas in general and validation. Okay, so we've got both support and resistance and order blocks wrapped up in this example. So right here, we've got our area of resistance. Very obvious, right? Very clean. Very structured. Price isn't muddled through and just running through it, disrespecting it. Price comes up here, touches, good move away, touches, dramatic move away. Hey, I want to be tuned in and cued into what's going on down here when price comes to this area. So that's why it's blocked in there. So now, if we go down here and we look for validation for the support and resistance trade, what do we find? I'll give you just a second to identify this. Momentum reversal right here. Okay, we've got the bullish momentum, we've got a doji, we've got a bearish engulfing. Pretty darn picture perfect right there. Sinks right into the key area, excuse me, and then finds that momentum to push away. Then price comes back, pushes a little bit deeper into the key area, gives another momentum reversal. But as you can see, this one is not picture perfect at all. I mean, look at the wick on that. Remember, this is the placeholder of our momentum candle. This thing needs to be mostly full body. Doji is completely fine. Bearish engulfing is fine. It's got some wick, but it's okay. Okay, so that's that trade right there. But then right off the back of this support and resistance trade, this is why I love this example. And these trades, I took both of these trades the first time that I was actually filming some of the coursework. Then I took these trades and it just kind of like threw me off because I had to keep managing these trades. I actually took 4 trades. And I think that I'm going to put that footage at the in the intro or something like that. So anyway, 10-minute order block right here. Okay, 10-minute order block. Price comes up, dropping down to the 1 for validation. Needs to break some structure. Breaks the structure. Now we have a valid 1-minute order block just waiting there to be tapped, and it's tapped right here by this candle. Tapped in. I think the candle went all the way up to the top right there. And then boom, in the trade. Okay. And this green line represents a trailing stop that I had because I wanted to make sure that I locked in some profit just in case it turned around, and it actually did turn around. And this was a 1 to 6. This was a 1 to 8 point, basically a 1 to 9. And so neither one of those hit the take profit, but I was able to walk away with profit, okay, because of management. So yeah, this is another example of an order block trade. So I think that really covers the entry patterns. Okay, you know what to look for, you know the price action that you're looking for, you know how to validate your trades, whether it's an order block, whether it's support and resistance. You know there's no more buying on a touch, there's no more putting a bunch of stock in a simple level or anything like that. With order blocks, the more conservative way is wait for a little bit more structure to break, and then also look for an actual break in the order block that you're targeting. So see how this order block right here, it broke this area. Okay, it broke the area, so that's a higher quality setup. And then increasing your probability. You understand that by validating your trades, you're going to increase your profitability, but also if you want to get familiar with using the fibs on your trade to go at the 50% mark for your order block moves, you can pretty dramatically increase your RR. We're talking, add a third onto your RR, in some cases a little bit more. So all right, we'll move on to the next section. Let this sink in, come back, revisit, go to your own charts, start to find the order blocks on the 10-minute, drop down to the 1-minute, start validating them, plot in your support and resistance zones, and then drop down to the 1-minute and start validating those.